Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 3 of September 2025. Brookfield Asset Management is reportedly in discussions to acquire Yes Communities, a US manufactured home landlord, from Singapore's GIC for over $10 billion. The Canadian asset manager has been in negotiations for several months, though a final agreement has not yet been reached. Yes Communities, which GIC acquired in 2016, manages over 54,500 home sites across 18 states. Customers are cancelling approved car loans. This is because of the goods and services tax rate cut on passenger vehicles. The 56th GST Council approved reducing the rate for cars up to 1,200cc to 18%. The new rates will be effective from September 22nd. Borrowers are opting for fresh loans after the rate cuts. Reliance Jio and Bharti Airtel are investing heavily in AI, cloud and data centers. They aim to capitalize on India's growing cloud and AI markets. Jio focuses on consumer ecosystems and partnerships. Airtel targets enterprise needs with sovereign cloud solutions. Both companies are building data centers and partnering with tech giants. Homegrown FMCG products maker Marico has announced the acquisition of the remaining 46.02% shares of HW Wellness Solutions, which owns the True Elements brand. This will be done for a consideration of up to Rs 138 crore towards the acquisition of the balance 46.02% equity stake in HW Wellness, Marico said in a regulatory filing. The deal will make the Pune-based packaged foods company a fully owned subsidiary of Marico, which earlier invested in HW Wellness to acquire 53.98% in May 2022. The SEBI board has approved a slew of reforms and ease of doing business measures that will help IPO-bound large companies and low-risk foreign investors among other segments. In a decision which comes ahead of the mega initial public offerings by NSE and Reliance Jio Infocom, the SEBI board decided to recommend the government to amend the statutes governing minimum public offerings. Under the proposed framework, companies with a market capitalization between Rs 50,000 crore and Rs 1 lakh crore would be required to float 8% of their equity instead of the current 10%. Such firms would also get a timeline of 5 years instead of the present 3 years for achieving the minimum public shareholding requirement of 25%. For companies with a market capitalization above Rs 1 lakh crore, mandatory offer requirements would be reduced to 2.75% from the current 5%, while those above Rs 5 lakh crore would need to dilute only 2.5%. Such large companies would also be given up to 10 years to achieve the 25% minimum public shareholding requirement compared to 5 years at present. This means companies can list with smaller IPOs initially while gradually increasing their public shareholding over a longer period, reducing the immediate burden of large-scale equity dilution. India and the US are set to resume trade negotiations. Brendan Lynch will arrive in India. Talks stalled over US access to Indian agriculture and dairy markets. The US imposed tariffs in response. Both countries are now showing flexibility. The US may focus on premium cheese exports. India might allow GM corn imports for ethanol. As the fresh round of negotiations begin today, all eyes will be on whether Lynch and his Indian counterparts can translate the political thaw into substantive progress. If both sides are willing to compromise without crossing their red lines, a limited but meaningful trade deal may finally be within reach. Reliance Group companies led by billionaire Mukesh Ambani have successfully raised approximately 210 billion rupees through asset-backed securities. This deal, one of India's largest this year, saw strong demand from leading asset managers like Aditya Birla Sun Life and HDFC Asset Management. The issuance, structured via pass-through certificates with varying maturities, carries an average coupon of 7%. The Commerce Ministry will soon release a list of 100 imported products. These include chemicals and plastics. The goal is to boost domestic production. This initiative supports self-reliance and the Make in India campaign. The list aims to encourage local manufacturers. It will help them to expand or utilize existing facilities. The move aligns with the government's Swadeshi push. Maruti Suzuki India aims to dominate the mid-size SUV segment, challenging Hyundai's lead. With the new Victoris, priced from Rs 10.5 lakh, the company targets Gen Z through its Arena retail chain. Maruti Suzuki seeks to become the market leader, a position it currently lacks in this segment. Online investment platform Grow is reportedly set to file its updated draft red herring prospectus or DRHP with the Securities and Exchange Board of India this week. The company is targeting a November listing with an IPO size of $800 million to $1 billion. Grow is preparing to go public at a valuation of around Rs 80,000 crore or $9 billion, higher than its earlier 7 to 8 billion target on the back of a strong financial performance. Grow was valued at $3 billion in 2021 during its Series E round. The proposed listing would mark one of the most high-profile debuts in India's startup and financial services ecosystem. Walmart-owned e-commerce giant Flipkart saw a widening of consolidated losses to Rs 5,189 crore in the financial year ended March 2025. Flipkart India's losses stood at Rs 4,248.3 crore in the preceding financial year. The company recorded a 17.3% increase in consolidated revenue from operations, rising from Rs 70,541.9 crore in financial year 24 to Rs 82,787.3 crore in financial year 25. The company's total expenses for the fiscal year swelled 17.4% to Rs 88,121.4 crore. India and the US have expressed optimism regarding their ongoing trade negotiations, agreeing to accelerate efforts towards a mutually beneficial trade agreement. Discussions between officials from both nations, led by Chief Negotiator Brendan Lynch from the United States Trade Representative, covered various aspects of the proposed deal. This resumption of talks signals a renewed commitment to strengthening India-US trade ties. ThyssenKrupp has acknowledged receiving a non-binding offer from India's Jindal Steel for its steel division. The company's executive board will thoroughly assess the bid, placing particular emphasis on economic viability, the ongoing green transformation initiatives, and the preservation of jobs at its steel production facilities. Further details regarding the offer remain undisclosed. From September 22nd, insurers cannot claim input tax credit on commissions, brokerages, and other services for individual health and life insurance policies, as these premiums are exempted from GST. Only reinsurance services will remain exempt. Similarly, hotels, beauty, and wellness services taxed at 5% without ITC cannot claim credit, ensuring lower consumer prices but higher provider costs. The Central Board of Indirect Taxes and Customs or CBIC has released a circular providing much needed clarity on the treatment of post-sale discounts under GST. One of the key clarifications provided is that the recipient is not required to reverse input tax credit in respect of discounts extended through financial or commercial credit notes. Since these discounts do not alter the original transaction value of the supply, the corresponding tax liability of the supplier also remains unaffected. This ensures that buyers can continue to enjoy full credit without any additional compliance burden. The Securities and Exchange Board of India, or SEBI, has cleared the initial public offering of Pine Labs. The firm aims to raise Rs 2,600 crore through fresh equity. The fintech unicorn submitted its draft red herring prospectus to the SEBI on June 26th, taking a step closer to its public listing on Indian stock exchanges. According to the DRHP, proceeds from the fresh issue will be used to repay or prepay borrowings of about Rs 870 crore. FMCG majors including Mother Dairy, HUL, P&G and L'Oreal slash prices by 5 to 20% as the GST 2.0 comes into effect on September 22nd. Products like milkshakes, butter, shampoos and personal care items get cheaper, with companies passing on full tax benefits to boost consumption. About $13 billion worth of IT deals are set for renewal by December, with TCS, Infosys, HCL Tech and Wipro competing for mega contracts. Over 600 engagements worth up to $2 billion are in play, as clients demand AI-led efficiencies amid cost pressures, keeping large deal momentum strong through 2025. Finance Minister Nirmala Sitharaman announced that the GST rejig is expected to put Rs 2 lakh crore back into the hands of the common people, potentially boosting discretionary spending. She highlighted that 99% of goods contributing to 12% of revenue now fall under the 5% GST slab, benefiting the middle class and the poor. The government is set to create a unified electronic land record database. This will cover both rural and urban areas, clearly defining ownership. The initiative aims to improve information flow and reduce disputes. A pilot project is underway in 160 cities under the Naksha initiative. Rural land records are already being digitized. The National Payments Corporation of India, or NPCI, the organization that facilitates the Unified Payments Interface or UPI, has announced an increase in per transaction limits for entities under categories aligned to tax payments. The changes came into effect from September 15, 2025. In a statement, NPCI has said that the increased limit will be applicable to entities under categories aligned to tax payments to Rs 5 lakh. After the increased limit comes into effect, the UPI limit for government e-marketplace, travel and business or merchant related transactions will be Rs 5 lakh. Not just that, NPCI has also increased the transaction limit to Rs 10 lakh within 24 hours for categories like insurance premiums and capital markets. Urban company shares surged on their stock market debut on Wednesday, listing at more than a 57% premium to the IPO price after drawing frenzied demand in the primary market. The Rs 1,900 crore public offering of the home services platform was subscribed 103.63 times between September 10th and 12th, making it the most heavily subscribed share sale in India this year, according to Bloomberg estimates. Mukesh Ambani plans to launch Jio IPO in 2026. It could be India's biggest IPO. The IPO has sparked debate among investors. They are discussing whether it will unlock value or create a holding company discount for Reliance Industries. SEBI's new rules aim to reduce concerns. Analysts have mixed opinions on the potential impact. The good edge is value unlocking. A Jio IPO would allow RIL to unlock the value of its digital business, a benefit to investors in a few ways. The bad edge, which is holding company discount and risk. The IPO structure could also lead to a valuation discount for the parent company RIL while presenting inherent risks for new investors. Dorf Kettle, a Mumbai-based specialty chemicals manufacturer, is in advanced talks to acquire Italmatch Chemicals SPA for $1.6 billion from Bain Capital. This acquisition aims to diversify Dorf Kettle's portfolio into water treatment, lubricants, and flame retardants. The deal, expected to finalize soon, marks a significant consolidation trend in the specialty chemicals industry. SEBI has exonerated Gautam Adani and other Adani Group companies regarding Hindenburg Research's allegations of stock manipulation. The investigation, spanning from financial year 13 to financial year 21, found no evidence of fraudulent transactions or siphoning of funds. SEBI concluded that the transactions in question did not qualify as related party transactions, thus not violating listing agreements. Nvidia said on Thursday it would invest $5 billion in Intel, throwing its heft behind the struggling US chip maker just weeks after the White House engineered an extraordinary deal for the US government to take a massive stake in the company. The stake instantly will make Nvidia one of the Intel's largest shareholders, giving it roughly 4% or more of the company after new shares are issued to complete the deal. India's wealth creation is rapidly expanding beyond major metropolitan areas, though still concentrated in the top 10 states. While Mumbai, Delhi and Bengaluru lead, Tier 2 cities like Ahmedabad and Surat are emerging as millionaire hubs. Wealth management services are now targeting smaller towns driven by technology, financial growth and increased access to information. The Reserve Bank of India has issued fresh directions on the regulation of payment aggregators or PAs. The framework specifies detailed requirements covering authorization and capital norms, operational conduct of PA business, KYC and due diligence standards, and the use of escrow accounts. These measures are intended to ensure financial soundness, mitigate risks of fraud, and establish robust checks for customer data and transaction handling. A major focus of the directions is on the management of escrow accounts by payment aggregators. The RBI has laid down specific rules on the operation of such accounts, ensuring that customer funds are protected and settlement obligations are met promptly. Additionally, general directions have been prescribed to maintain transparency and accountability in fund flows. Fintech firms such as PhonePe, Paytm and Cred have pulled the plug on rent payment services through their apps. The service had been a popular choice among consumers to use credit cards in recent years. The move follows the Reserve Bank of India's stricter rules for payment aggregators and payment gateways issued on September 15th. The revised framework specifically prevents PAs from processing payments for businesses without a direct contractual arrangement. This rule effectively limits rent payments made through fintech platforms, as landlords are usually not registered merchants who have undergone the required KYC process with the app. President Trump has introduced a $100,000 annual fee for H-1B visas, aiming to attract highly skilled individuals and discourage the displacement of American workers. This decision significantly impacts India, as its IT sector heavily relies on the H-1B program. The new Gold Card offers expedited green cards for those investing substantial sums, making a continuation of the administration's immigration restrictions. Maruti Suzuki will reduce vehicle prices across its portfolio. passing on the full benefit of recent GST rate cuts to customers starting September 22nd, 2025. Price reductions range from Rs 46,000 on the Ertiga to Rs 1,29,000 on the Espresso, including additional incentives to boost sales. Elon Musk's XAI has raised $10 billion, bringing the AI firm's post-money valuation to $200 billion. The $200 billion valuation would be an over twofold jump from the $75 billion in July. The funding could go to building data centers using NVIDIA and AMD graphics processing units needed to develop next-generation AI, as well as to hire expensive talent. The Central Board of Indirect Taxes and Customs has issued a notification granting relief to small taxpayers by exempting them from filing the annual return under GST. This change applies from the financial year 2024-25 onwards and is aimed at easing compliance requirements for businesses with relatively smaller turnovers. As per the notification, registered persons whose aggregate turnover in any financial year does not exceed Rs 2 crore will be eligible for this exemption. By setting this turnover threshold, the government ensures that micro and small enterprises, which often face resource and compliance constraints, are the primary beneficiaries. Prism, the parent company of Oyo, has launched Check-in, a brand that brings together its premium value hotel offerings, including townhouse hotels, clubhouse, Sunday hotels, Bell Villa, and Palette hotels. Earlier this month, IPO-bound Oyo's parent entity, Oravel Stays, rebranded itself as Prism. With a network of more than 1,300 hotels across India, Check-in is currently the country's largest chain in the premium value segment. Properties under the brand will be managed by dedicated check-in teams and partner operators, with a focus on consistency and guest experience. RBI Governor Sanjay Malhotra urged CCIL to develop infrastructure for currency pairs beyond USD INR, supporting rupee internationalization. He also emphasized enhancing retail investor offerings in forex and government securities, aiming for a seamless customer experience. Malhotra highlighted India's pioneering role in anonymous electronic trading of government securities and repo transactions. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.